And good afternoon. Welcome into Market Talk for Wednesday, December 16th. I am your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That is where you can find us on the web. Facebook, Twitter, and Instagram. It's all at Market Talk Ag. You can find us there and all of our great radio station affiliates, including WIBW in Topeka, Kansas, KWMT in Fort Dodge, Iowa, and so many more across the country. Great to have them part of the Market Talk family. I mentioned Iowa, and of course, me being from Iowa, I always like to sit down with my good friend Chad Hart, economist with Iowa State University, and he is our guest today here on Market Talk. Let's bring him in. Chad, good to see you. How are you?
All right, Jesse, how you doing today?
I'm fantastic. I always enjoy our conversations, Chad. It's good to catch up every now and then, as we've talked for many years together, and always love to get your insights on the markets and where things are heading. And I think a good place to start. Let's talk about the December WASDE report. And today, overall, in the market trade was pretty quiet. We didn't see a lot of moves in the market here on Wednesday. But that December WASDE report was kind of a weird report. We saw soybeans kind of took a hit, and now we've kind of rallied back a little bit. Just overall, what is your perception of that December WASDE report?
Well, when you think about what that report said, it basically held firm on things. We didn't change anything on the corn balance sheet. We made minor adjustments to the soybean side. And so it was sort of confirming sort of where USDA's been for at least the past couple of months. And I think the market has taken that as an opportunity to sort of settle down, take a breath here. And I've heard it described as we're sort of range bound right now. The idea is not moving too much right now, waiting for some new information to come in. But when you think about it, that report sort of confirmed some of the strength that we've been seeing. It basically said, hey, we're looking at the potential of record corn exports. We're looking at the potential for record soybean exports. That the ethanol industry has recovered some, but not completely. And that feed demand is holding very firm because the need for meat and protein out there worldwide is very strong. So it was supportive in that way, but it also didn't provide new fuel to go to the next level.
Well, and Chad, we think about that December report, and typically we don't see anything in that report. It's usually pretty just flat. USDA stays firm, but even with those few minor changes, and we saw that carry out tighten on soybeans even more. And I think a lot of folks are now looking ahead to that January report for maybe some final acreage numbers and to really maybe see some fireworks in this market one way or another. And I think just with the little bit of change we saw in that December report, feel like maybe my gut feeling saying it could be setting us up for an interesting January report.
It definitely is. And I think you hit upon the key there. I mean, the big number we were watching on the soybean side is that ending stocks number, down to 175 million bushels now. And so you got to feel like we're in that what we call pipeline territory, where this is about as low as that number gets. And from here on out, it's going to be this struggle for, if you will, where prices might go. Because if somebody really needs the soybeans, they're really going to have to bid them up to pull those out of storage now. And you combine that with some dry conditions that continue to hit South America right now, and also the dry conditions that actually maintain here in the upper Midwest, setting us up for concerns about 2021. And I would agree that it's setting the potential up for more explosive price movements as we move into springtime. But also, I would say, and the reason we're sort of range bound right now is everybody's waiting for more information to roll in before trying to jump that train.
I think another thing we should touch on as well that probably will be the next factor after that January report that could really start to shape this market the first half of next year is this acreage battle between corn and soybeans. And, we're starting to hear more and more, and you may be hearing this doing, different winter meetings virtually or whatnot, or talking to producers. depending on where price levels are at, we could see more acres go to soybeans in 21 versus corn. And I think a lot of folks are really focusing on that as well. What are your thoughts there?
Well, we definitely know soybeans is going to gain a lot of land. I mean, when you look at this year's crop, the idea is, corn's around 90, beans were down there at 84.
Hmm.
So that tells you, okay, right off the bat, we're talking about at least 6 million more acres going into soybeans right now. And when you looked at even USDA's long term projections, they basically said, hey, they see soybeans capturing that land and possibly a bit more. And I think that is truly the interesting thing as we look at 2021. Corn prices are strong enough. They're definitely looking to defend that 90 million acre territory. Beans high enough in the double digits now to pull some land towards them. And we've also seen wheat rally to get ready to try to capture some, especially through spring wheat. And so when you're looking at the three major crops, all three of them right now are either trying to defend land or gain more of it. And what was fascinating to me about USDA's long-term projections is they basically said all three gain, at least in the short term.
Well, and mentioning wheat as well, we should touch on that a little bit. We've heard the news from Russia that they're talking about this export tax, but still, even with the U.S. dollar continuing to go lower here, wheat still it's having a tough time getting some of those tenders overseas. A lot of that business going to the Black Sea region. A lot of wheat producers are sitting here, even with the small rallies, struggling with some of these price levels. What are your thoughts on wheat overall?
Well, that's the deal. I would agree that we're having a harder time getting traction on the international marketplace. But that said, I guess I'm more confident we'll see some greater gains as we're looking forward here. You mentioned the Black Sea right now. They've been open for business, but looks like Russia's going to start to shut that down. When we look at Australia, they're back in play again. But again, we've sort of got an advantage with them right now with our exchange rates. And when I'm looking here, it's also this, let's call it the competition within the feed grain sector. The idea is right now, corn is competing very well. Soybean meal is doing very well out there. Wheat. And when you think about the global feed market, wheat is a bigger component there than it is here in the US. And so it's that drive for feed that I think is going to help prop up wheat prices as we move into springtime.
Well, it's definitely going to be an interesting shift as we move into springtime. That's for sure, Chad. Just looking at the market here today, we closed above some resistance on the corn side. We are holding steady in that 1180 range in beans. And, you mentioned the rally in wheat. If I'm a producer right now looking at this market today, heading to Christmas, I've heard a lot of folks talk about if it makes sense for you to kind of watch and play some of these short-term rallies. What would be your thoughts or your advice for some producers right now watching this market overall?
Well, definitely, I think it's one of these unique opportunities where we look at where we're at now versus this time last year. We're in stronger price position, and so I think it does make sense to start looking now, and especially if you're already spending some money out there buying some inputs, put that fertilizer down, maybe make a few early sales, but not get too aggressive. But especially if you've got an opportunity to put in price floors that leave you upside potential, that is something I can see doing right now. Because as we mentioned here, the idea is we're looking for a lot of that volatility to be on the upside. But remember, when you get volatility on the upside, you also get it on the downside. And so I think now's a good time to put in some price protection. Maybe have some, calls that chase you on the way up if you're going to make some sales, or put some puts underneath you to put in that floor. And like I say, leave yourself that upside potential, because usually, and I think this is what we're hoping for in 2021, is that we won't see a year like this year where we saw declining prices throughout the springtime. Normally, seasonally, we see them strengthen over that period of time. And I want to make sure that my marketing plan leaves me open to that possibility.
Chad, let's talk trade a little bit here before we segue to livestock. And just looking at exports, things that remain strong there. And China, of course, still a player. We're waiting to see if we'll get all those deliveries that have been thrown on the wire, even though the export wires quieted here in recent weeks. Trade still remaining fairly strong. And looking at some of these other emerging markets as well in Asia and India and things of that nature, obviously there's a South American crop we're watching to see how that shapes up. But just as you wrap up 2020 and you take an overall snowball globe look at trade right now, what are some of the big things that you're seeing, both good and bad?
Well, you hit upon a couple of the big ones there. When you're looking at soybean market, especially, China's the driving feature. We look at the sales thus far; we're up there around 1.9 billion bushels already. USDA's target is 2.2, so that tells you we're 85% of the way there, and we've already delivered on, I believe it's 59% of those sales. So we're well ahead of pace in terms on the soybean side, looking very strong. Corn, the sales are strong, deliveries are running behind. But what I like about the corn market is it's not just one country dominating the scale. China's a big player, yes, and the phase one deal is helping there. But you're seeing growth in Mexico, Japan, South Korea, Colombia, Guatemala. The idea is that we've got very broad strength that's really helping those markets along. The challenge would be if we do start to see cancellations. And that's where I am watching China, especially as we move through the January timeframe. Because as you mentioned, I think they, just like us, we're watching that South American crop develop. And if they think they see an opportunity to grab some cheaper feed into the springtime, I think we could see some cancellations, especially in the corn market from them. But again, given the dry conditions we're seeing down there, it looks like that crop's going to get a little smaller as opposed to a little larger. And I think that helps hold the sales we've already made here.
Talking trade, and we can kind of roll into livestock and focus on livestock trade first. Mentioning China again, hog trade, hog exports. We're hearing a lot about China ramping up their hog production, these so-called hog hotels, these multi-level facilities that they have. And obviously sometimes it's hard to get the exact information from the Chinese as to what is really going on. But overall, looking at pork demand as we move into 21, COVID has played a role in that, obviously, with retail demand, etc. What are your thoughts on pork exports and this market moving into next year?
Well, I think that for the pork market right now, what we're trying to do is just basically hold on to what we've gained here 2019 and 2020. You're right in that China continues to rebuild that hog herd. I mean, that's part of why we're seeing the surge in corn and soybeans going into that country. They're rebuilding their supplies in order to bring that industry back up to, I won't say necessarily all the way back up to its former capacity, but at least pretty close.
Mm-hmm.
That said, though, when you're looking at the export market that we've had in pork over the past couple of years, it has been phenomenal. Basically, we're on pace this year to double the amount of pork exports that we had 2 years ago, which was a record level by at that time. So you're talking incredible growth over the past 2 years, and if we can just maintain that, that lends to a lot of strength in the pork market. The other thing that I'm watching in the pork industry is that we're not seeing, let's call it, the push to necessarily expand our way into a significant price decline. The industry, especially over the past 5-6 years, has been much more willing to self-govern, self-regulate itself, so that we don't get supplies running out there well ahead of demand.
Looking over on the beef side of the equation, trade wise, again, I think it's somewhat of the same storyline there with exports, just with COVID and everything else playing into that factor. But we have seen a lot of strength at feeder cattle right now. Just talk about what you're seeing with beef exports and that side of the trade equation.
Well, with beef, I mean, the growth has been much smaller than we've seen on the pork side, but I'm going to argue is much more consistent in this case. You don't have that African swine fever rebound storyline playing out in the beef market. This is more about global demand for protein really pulling forward on this. China has opened themselves up, so they've been the biggest market mover. But what I'm encouraged by is when we look at places like Japan and South Korea, two markets that have been very strong for us over the past decade, and we're seeing growth there. And so when I'm looking overall, the idea is that you've got, the new customer in China that's growing dramatically. And I think that's a toehold that we're going to hang on to there, but you're still seeing that consistent sales base there in Eastern Asia that is growing despite the pandemic. And so that bodes well for the industry. Same thing, as I sort of mentioned with pork, I'll say here with beef as well. What we're seeing in terms of the animal numbers moving forward into 2021 is sort of like a little pullback. We're not going to run as many cattle through. We're still going to probably produce a record amount of beef in 2021, but the growth is slowing down to make sure that, again, we're pairing our supplies up with the demand we see out there from the international market.
Chad, on the futures side of the equation, as we factor in trade and exports, we've been pretty range bound when it comes to cattle and hogs for that matter. I know hogs, that February lead month contract kind of caught up to the cash index, and it didn't take very long. But overall, with all these markets, we just seem to have been really range bound here for quite some time. What are your thoughts on that as we move into 2021?
Well, I'd say it's good to be range bound when you're at a fairly decent price. And one of the things that, having, now experienced through 2020 is what we saw was we started out the year fairly good on the livestock side, saw significant downturns, and we worked our way back up. But yeah, we're not seeing the explosive growth in there yet. And again, I think it goes back to, the industry really working on keeping supply growth light enough that it doesn't outpace where the market's already at. And so that's reflecting in the cash prices we're seeing. That's reflecting in the futures that we're seeing out there. And, like I say, when I'm looking at this global need for protein, it's what's helping us hold in that range, but that range is not a bad place to be.
And I think a lot of producers, they've seen this range hold here for quite some time, and they maybe have seen that there's some opportunity to make some sales and find some break evens at least at these price levels.
Yeah, there are, and especially thinking about pork. Here we sit in the fourth quarter, and I'm still talking about prices on the board, in the 60s. That's not a bad place to be in the fourth quarter. And as we look out, towards spring, we get up there around the $80 mark. When I'm looking at the cattle, we've been holding, up and above $100 here now for a little while. Yeah, we're not seeing that strong movement up above 120, but we're also not dipping down very much. And as you mentioned, actually, if there's been one market that's had a little upside here recently, it has been that feeder cattle market, because if anything, there's this concern that the industry may have slowed itself down just a little too much. And especially if we can get into 2021, get the vaccine distributed worldwide, and really start to reopen these economies, that could lead to an additional spurt in protein demand worldwide that we're going to need to respond to.
Well, Chad, all great insight as always. Any other final thoughts you have for us here today?
Well, I would say this. I mean, when we're looking here, ag is one of the few sectors in 2020 that we can argue we're finishing the year better off than we started. And that's a very unique thing to say this year. That said, though, I hope what our listeners find is that they go into 2021 is that they have a happy, healthy, and prosperous new year.
I couldn't agree more. With that, Chad Hart, economist with Iowa State University, thank you for joining me today on Market Talk. I appreciate it.
Thank you, sir.
Chad Hart, our guest today, and that has been the Wednesday, December 16th edition of Market Talk. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.